We'll also invite on the show now our Alpha Manager for the day, Trideep Bhattacharya, CIO Equities at Edelweiss AMC. Trideep, morning, afternoon now. Thank you very much for joining in. There's a lot of excitement about mid-caps, and mid-caps have had a phenomenal rally. Your mid-cap fund AUM is close to about 3,000 crore rupees, 2,800 crore rupees. Can you give us an indication in the last 1 month, which are the stocks that you've added on where the numbers look good, where your conviction is very high on the mid-cap or on the small-cap end of the universe?
Yeah, so great question to start. I would say that over the last month or two, one of the things that we noticed was that the valuation differential, which was earlier loaded in favor of large cap and was against mid and small cap, came to a more reasonable levels over the last couple of months, and hence mid and small cap as a basket has started doing well. And also we've sort of, we've been recommending from an asset allocation point of view to our customers that broadly now might be the time to allocate a little more towards mid and small cap overall as well. That's the first thing that I would say. Second, I would say that, the market is also getting the whiff that in and around current levels, the interest rates have broadly peaked or maybe there or thereabouts. And when that happens, then the slightly higher risk buckets of the market start to do better, which is what we see in the form of mid and small cap names. So I see a bit of relaxing macro conditions more as a reason behind mid and small cap names rather than really kind of, bottom of stupendous earnings. But the areas that have done well for us in mid cap would be broadly the manufacturing part of the sector, which is industrial, capital goods, and the likes. And there, the companies that we own, without getting too specific, have actually beaten consensus earnings estimates anywhere to the tune of 20 to 30%. So we do think that that part of the economy is really kicking, at a very phenomenal pace. And that's by and large what has helped us in our mid-cap fund overall.
Hi, Trideep. Good afternoon. Trideep, the problem pocket has been rural India, right? Are you seeing signs that that's turning around a little bit? Because that's really, we are talking about the urban consumption story, which is good. Parts of rural India are still in pain. But in a run-up to election year, general election year, hope is that maybe the spends increase out there with the kind of push that will be given from the central bank, from the central government. What's your sense? How do you see things shaping out here? And will you look to play that theme?
Probably kind of, will resist a bit longer. And the reason why I would say that is because, yes, overall over the last year or so, the rural-focused stocks have not been, have not really had their time in the sun. And also, as you say, the construct is such that as we head closer to elections, there might be rural spend. But on the other side, if you look at, let's say, monsoon and rural part of the economy is to a certain extent driven by monsoon, then, the presence of El Nino as an effect could impact the earnings of these companies for a little longer. That's one. Second, while inflation in general has peaked, my sense is that it might be a little more stickier than what most people think. In that context, we think that a stickier inflation impacts the rural part of the economy a little more than the urban side, just because of the percentage of their free cash flow that comes from staples, etc. So both of these put together makes me feel that the near term, i.e. the next couple of quarters, could see continuing weakness on the rural side of the economy, and hence would probably wait for a little more bargain to occur before we kind of play the reversion to mean hypothesis with regards to rural. Overall, our portfolios at the moment would be kind of overweight manufacturing, underweight consumption, and within underweight consumption, we would be probably underweight rural part of the economy in a meaningful way.
Okay, well, Sudeep, stay with us. Lupin is the other one we want to just quickly touch upon. It's surging in trade. Ekta is here with details. Ekta.
Thanks for that. Well, yes, Lupin is at a fresh 52-week high in today's trading session. The news with regards to Lupin, or the latest news, is that they have received approval from Health Canada, which is the Canadian regulator, to market a generic version of Spiriva generic, which is basically an inhaler drug. Now, this could be read as a sentiment boost simply because the street is awaiting the approval of Spiriva generic in the US markets quite closely. Now, as of Q4 FY23, what they had indicated the markets when it came to Spiriva generic is that the US FDA has provided a target action date. So that means that there could be any kind of indication from the US FDA by July, which would be without an inspection of any of their facilities, and by August with an inspection of Lupin's facilities for Spiriva generic. Now, the latest queries raised by the US FDA are procedure related. The management has said they remain optimistic of a first half FY24 launch. Remember, it's an important drug for them. They are expected to have a less amount of competition in this drug. The gross market size of it is around $1 billion in the US.
Okay, well, Ekta, thank you very much for that. Trideep, let me throw it across to you. Lupin and other sort of pharma names, which ones do you own, and what's the thought process across the space?
I think the pharma looks actually quite interesting to me. Overall, our stance on the sector has been neutral, but within that, our stock selection has done wonders for us. I mean, while I'm not allowed to name stocks here, I think on the fact sheet, particularly some of the mid-cap oriented names have driven a good bit of alpha, even though the sector has not gone anywhere. But overall, if you were to ask me from a sectoral standpoint, I think the sector saw the boom at the time of the COVID, normalized earnings in the subsequent 1 year, and now, if you ask me, offers a decent valuations when the US generic pricing is gradually kind of easing off. So again, stock specific, but I think the sector is an interesting juncture where stock selection could make a difference over the next 12 to 18 months. At the moment, our stance would be more neutral in our portfolios.
Trideep, coming back to that point about capital goods, and manufacturing, the theme that you're very bullish about, Cummins is one of your big holdings. The numbers look pretty good. The stock has rallied. But there are concerns broadly about the valuations of the sector. So would you recommend buying, these stocks at current levels, or would you wait for, better entry points?
So I think it's a great question. I would say, beyond a point, we are earnings junkies. We look at where the possibility of earnings upgrades are, and that is where we queue up. Some of these companies, without getting specific, have beaten the consensus earnings estimates in the last earnings season was anywhere between 20 to 30%. As long as we see that sort of earnings beats to come through from companies in the capital goods industrial segment, you would see that companies appear expensive, but on the back of estimates that are about to go up. And hence, as long as the earnings estimates keep going up, the stocks will probably kind of, follow them. So we follow the framework that we follow at Edelweiss long only MF is certainly to look at potential areas of earnings upgrade and stay put there. For example, within industrials, defense is another area where we've seen some of the companies beating earnings estimates meaningfully. So various parts of the industrial goods, not just one subsegment, have been doing well, and fortunately we've had decent exposures to them.
Through the final question from my end before I let you go, ITC flashing for our viewers on the screen, the most ignored stock and the best performing stock in the last 12 to around 18 months. So the sense you get is something's got to give now. The numbers have been showing up. I don't know whether that long-awaited some kind of intent or corporate action can come about. But that's part of your portfolio. What's the view from here on?
I think the stock has done phenomenally well. About a couple of years ago, we spotted that on the back of ESG concerns, certain segments of the market were looking underpriced, even though there were earnings upgrades happening. The multiples were unduly depressed because of some of these ESG-related worries. And I think while we are mindful of ESG, we wanted to sort of, align ourselves more towards earnings upgrades, as I was talking overall, and that has worked well for us so far. With the amount of volume growth in some of these segments, which have come in double digits, I think as long as that continues, we will stay put. But overall, I think the stock has done well. We are probably not adding incremental weight there as we speak in terms of the staples part of the segment. Overall, as long as the earnings upgrade come through, we are not kind of, taking our bets off either. So that's where we are on the consumer staples in general, and maybe a few stocks there or thereabouts.
Well, it's been a good call, and it's worked quite well for you all. But as you said, you'll be continue to track the earnings, though you won't be adding on incremental weight on this one. Just looking at the screen, the sense is maybe this year is the big year for ITC. Let's see whether or not we hear something from the management. Thanks so much, Trideep, for stopping by and giving us your view on a whole host of stocks as well as sectors. For the time being, though, we'll